So CalBank says they're raising GHS 900 million through something called a rights issue. And everyone's talking about it like it's a big deal. But what does it really mean? Is this a chance to grow your money or a trap for beginners? Let's break it down simply. No fancy finance talk. Welcome to the Investment Nerds, your personal guide to investing in the African stock market. What's going on? CalBank wants to raise GHS 900 million to strengthen its financial base. Think of it as the bank saying, "We want to get stronger so we can lend more and grow faster." They're doing this through a rights issue. That's when a company offers new shares to existing shareholders at a discount before offering them to anyone else. So if you already own CalBank shares, you'll get the first chance to buy more shares cheaply before outsiders do. The key details. Here's what you need to know. CalBank is issuing 3.1 billion new shares. Each share will cost GHS 0.29, way cheaper than the current market price of about GHS 0.80. The offer ratio is 1 new share for every 0.3643 shares you already own. Meaning if you have 1,000 shares, you can buy about 364 more at GHS 0.29 each. The offer opens November 3rd, 2025 and closes November 21st, 2025. If you don't buy your portion, your right to buy can be renounced, sold to someone else. That's why it's called a renounceable rights issue. Why is CalBank doing this? CalBank has been recovering after tough years in banking. They made profits this year, but their capital, financial cushion, is still below what the Bank of Ghana requires. So this rights issue will help them. 1. Meet the regulatory capital target, minimum 13%. 2. Strengthen investor confidence. 3. Expand lending and digital banking services in 2026. Basically, CalBank is saying, "We're fixing our balance sheet so we can grow stronger next year." What it means for you as an investor. Let's break it into simple cases. 1. If you already own CalBank shares, you can buy new shares at a discounted price, GHS 0.29. If CalBank's performance improves next year, these new shares could be worth much more, giving you profit. 2. If you don't buy your rights, you might lose value when new shares flood the market. That's called dilution, meaning your percentage ownership becomes smaller. But you can also sell your rights to another investor and make a small gain. 3. If you're a new investor, this could be an opportunity to join the company at a lower price through the private placement that comes later, when unbought shares are sold to the public. Important dates to remember. Here's the timeline you should keep in mind. Ex-rights date, 24 October 2025. Qualifying date, 28 October 2025. Offer opens 3 November 2025. Trading in rights 5 to 7 November 2025. Offer closes 21 November 2025 and shares listed on GSE 4 DEC 2025. If you're an investor, keep your eyes open in November. That's your window to act. The big question, should you buy? Rights issues are not always bad. In fact, they're a sign the company is rebuilding, but you should only buy if you 1. Believe CalBank will grow stronger after recapitalization. 2. Have extra cash you don't need immediately. 3. Understand that the stock price might dip short-term before bouncing back. It's like planting cocoa trees. You won't harvest today, but if the soil, the bank's foundation, is good, you'll enjoy the fruits later. This is not financial advice. Always do your own research or speak to a licensed financial advisor before investing. If this finally made sense, comment CAL below. Like, share, follow, and subscribe for more information.